welcome everybody. Welcome everybody. My name is Bhuvan Gupta and I run this company called Client First Capital. Now we manage roughly $50 million at 18% compound annual growth rate. And what is surprising for even us is that this year our portfolio is not down. And that's probably because of our asset allocation. So I welcome all of you. If you are not able to join because of the Sunday holiday, please look at the recording and feel free to send your questions. I also encourage the participant today who are there in the call to ask me questions, whatever they have. So I think everybody is right now thinking what will happen, what decision Trump will take, what kind of tariff may happen. Dollar might be losing their status as a reserve currency, and there could be further turmoil. Now, I really don't know much about the politics, but I have survived four crises, and I believe that this man called Warren Buffett is very much relevant today also, and that is why everybody should look into and look at and read about him. And I'm just visiting him in the next 2 days. I'm going to Omaha. It's my fourth visit, and every day, every time I go there with my whole family, this time more people are joining me. The clients and friends are joining me, and I think the most important thing for someone to learn is that how a person who is 95 or turning 95 has withered all the crashes and crises in the past. So we started our company at 2015. I'm an ex-banker. We bootstrapped the company, become a private banker, a broker those days, an advisor. It was a calling, inner calling that we want to work for customers. Again, that is why the company name came as a client first. And from there, we became a discretionary fund manager. We run a $50 million asset under management practice. We also have an India fund, which is similar strategy. What's unique about us is that we charge mainly on performance. So a client pays a small fee and they pay us when they make money. Also, one more thing, we do not do leverage. We don't short the stock. We don't buy derivatives. We are not somebody who can make you 2% or 1% every month. We believe in long-term compounding and we have compounded the wealth. We started, I think, in 2020 with roughly $3 to $4 million, and today it is $50 million and growing. And last crisis of April also we have survived very beautifully. And I'm sure with guidance of Warren and Charlie Munger, we will take our customers to the next height. We also have goals, the leadership principle of this company. We are very transparent, very ethical and integrity company. I generally invest my clients' money where I invest my money. So my own money is also invested in the strategy, and actually I'm managing my money, and clients are piggybacking where I manage my own money. So moving on, $1 somebody who gave us in 2020 January, we have moved that to $2.21, which is roughly 27% the outperformance as compared to S&P 500. And I don't really want to beat any index, but the method is very simple, and that will definitely beat any index because index is an average of all the great companies or big companies. It is not the average of the best companies. So if somebody knows how to pick great companies, he will eventually beat the index. So our ideology is very simple. We do not want to compare with anybody. We firmly believe in the principle of Bhagavad Gita, and all we want to do here is do a good job. We give a guidance of 13 to 17%, and we can't really guarantee any returns because equity investments can't be guaranteed. But having said that, the past record talks a lot about us. Let's move forward. Now, the fear, there's the light, the night light, the ocean is really bubbling. People are still thinking what will happen on Monday, whether China will bow down, or whether Trump will bow down. Exactly what happened, and this fear. Those people have more who have leveraged their investment. So I think three things: lady, leverage, and one more word in the financial terms are very bad. When I say lady means that you need to be very careful with your character. It could be also opposite for the a lady investor for the giant. So we have to avoid this attractions in the investing, and that is how we can survive the crisis. So what is happening? Let me set some stage about the fear. Now Trump presidency ushered in. He said, "I'll make America great." He started turbulating the whole atmosphere, the way he was trying to negotiate with Ukraine president, the way it happened also with the Indian president. A lot of things are happening. Unpredictability is at the highest. Uncertainty is something what market doesn't digest. Tariff wars, deregulation, and tax reform. These are all happening, and they all Trump is trying to do everything in one go, probably. Now it might be a negotiating tactics, but people get fearful when they are borrowed, and that's exactly happened in the last week, where the market fell 11% in 2 days, and Monday we could have been a further mayhem, and we'll see what exactly happened on Friday. So market reactions were swift. Obviously, they are not rational. Now, if markets are rational, then people like us will not exist. So there was a lot of WhatsApp forward being going on. Let's read. Let's also come to know about this man.
Something I want to tell you on a Sunday night, just to give you some idea on the U.S. markets. The S&P closed Friday at 5074. So S&P closed on Friday at 5074. The 12-month forward P multiple is around 18. If earnings estimate decline, say by 25%, in a scenario by which the trade war drags on, then the PE multiple can decline by 15x. That was the low in 2022. Then the S&P can trade to 3171, which was where, in both December 19 and June 2020, where we saw the.
So now if I pause that video, he is saying that S&P could trade 3,000. Right now S&P is at 5,000, which means a big haircut. It's a haircut of roughly what 50%, 40%, which is like a lot of people will be wiped out. And that was one thing. Then Mr. Kramer, who very famous Mr. Kramer, he came in and he has something else to share as well.
Something I want to tell you what is.
Now what he did, Mr. Kramer video also you see, and you see what exactly happened. So let me pause the screen sharing and share this screen with you.
I wouldn't want to be around for a day worse than this. That is what the president of the New York Stock Exchange said when the market closed today, down by every conceivable measure. The actual numbers make it look worse than the great crash in 1929. However, this is 1987.
The president doesn't try to reach out and reward these countries and companies that play by the rules in the 1987 scenario. The one where we went down 3 days and then down 22% on Monday has the most cogency. We will not have to wait out too long, will we? We'll know by Monday. Fortunately, we had an excellent set of employment numbers today. At least it makes it less likely a crash will necessarily lead to a recession. But if President Trump stays intransigent and does nothing to ameliorate the damage that I saw these last 2 days, I'm not going to be constructive here. I will contain my anger, but only because I lived through 87, and in the end, I came out okay. I was in cash for the crash. I know what this feels like. Oh, and if Europe moves against our fabulous tech companies next week, then I will be furious. That I promise you, because it should not happen.
Again, a misguidance. This person is saying that one should have cash, and that's how he survived. And now already you have bleeding for 2 days, and now he is telling you to have cash, which means you actually book your losses. So what exactly happened is media has increased the fear, and people sold a lot of their money, and they actually lost a lot of money because of these things. So let me share my screen again. So these are the two things which was happening, the media, and then now coming to this VIX index, which even a child knows. Now the problem of all of us is that we are interested to know VIX. VIX is something we should not know. In fact, in the information era, the most important thing we should know that we should not know certain things. Everything is available on a fingertip today. Like this Salmon Simic says that now you don't have to put an effort. You want to order an ice cream, just tap. You want to have you're dating, just swipe left or swipe right. And that's exactly we are suffering with. And this VIX index is not of any use, but people know much about it. I don't know who is telling us more about it and why we want to get into it. And let me ask my participants like Bhavat and Avdi, tell me who is the CEO of Amazon?
Jeff Bezos, sir.
Yeah. So that's yeah, and this is the wrong answer. So I'm sorry to say that, but we all get into this trap. Now, if we are investing into businesses and we don't know the fact, so Andy Jassy is the CEO of Amazon, and it is now 2 years. And that's exactly. But if you ask a child what is the VIX index, they will say, "Oh, it's a fear index. Oh, it is a volatility index." And even there is a serial called Wagali Ki Dunya, which is a very comedian, family-oriented episode. There also they talk about VIX. So I think the problem is we are in an information age where we have too much of information flowing. Because of this information, media magnifies. So what Kramer is saying, I was in cash. Now what will you do? People who do not take professional advice, they will sell, and they sell, and then Wednesday Trump paused the tariff, and you lost a lot of money because first you lost on the downside and then you lost on the upside. And that's exactly I'm trying to tell here is this is the what we happening. People who do not have, in fact a very good research came out, people who used to trade through telephone, they made more money than the people who have internet access. Because once you have internet access, all the time you're putting on the app and you're seeing it. And if we don't understand that the software is watching us, the app is watching us. So after that, what happened? Our cognitive bias comes in. There's a very beautiful subject called behavior finance. And all the recent biases, oh aisa hua hai, oh waisa hua hai, all that comes into it. Availability biases, because all this information was flowing through the door. And there was one more news came in that China is considering selling US treasuries, which means there could be a havoc in the bond market called safe haven. And because of this herd behavior and all, Monday people sold without even having the Black Monday crisis. That's exactly my point is. So this is how fear is. Now I look back to the same person called Warren Buffett with a net worth of $200 billion, showing the light for last 50, 60 years. I request all my participants, all my investors, all the young investors, all the employees of in wealth management companies to please read about this person. He says you can't predict what stock will do in the short run, but you can predict that business will do well over time. And I was sitting for a breakfast today, and there were some of them who were my friends and clients. They were still figuring out what is going to happen next week, what Trump will do. Somebody will say, I'm a technical expert. Right or not, this man has said this, but still, I think the first thing children learn when they become 18, they learn trading techniques. Basically, they learn to lose money because nobody knows what will happen on Monday or Tuesday or Wednesday. We should read balance sheet and financials. If you can't do that, give the money to professional, let them manage your money. Now, opportunity turmoil, how can we be immune to this turmoil? And that's exactly I'm gonna talk about. First of all, be fearful when others are greedy, and be greedy when others are fearful. Now, in this atmosphere, it is a time to put in a lot of money at the play. I don't know what is going to happen, but if today you will not buy, when there is a blood on the street, when will you buy? And this is why we are part of a what you call tribe called value investors. We invest when there is a blood on the street. And Rothschild said, buy when there is a blood on the street, even if it is your own. So historical context, 1987 crash, who bought, he made money. 2008 GFC crisis, who bought, made money. Now, volatility create buying opportunity. Volatility is something we should welcome. Now, what these people have to say, Charlie Munger, Warren Buffett, they said patience is better than prediction. Intrinsic value, which is the true value of a company, is better than market noise. And third, avoid reacting to every tweet or headline. But I think the problem is we want to be on Twitter, we want to be on LinkedIn, we want to be on social media. We don't want to read 2 pages. We don't want to read 5 pages of investing fundamental. And that is why I ask, who is the CEO of Amazon? And let me ask one more question to both of you. Who is the CEO of Apple? Now, all of us die to buy the phone of Apple. But when we want to talk about, this is what the whole issue is. Probably we are not wired to do it. One more question I have for everyone. Why there is no MBA in investing? Bhavat, Avdi, why there is no MBA in investing? Why MBA is on marketing, MBA is in HR, MBA is in finance, but there's no MBA in investing? And this is a pertinent question. Why regulators, when they open your account as a share trading account, as a broking account, why don't they give you 12 hours of education, which is to be must before you start trading your money? Because if you want to buy an antibiotic, medicine for your own health, or you want to buy an injection, you cannot administer that on your own. You have to go to a doctor, have a prescription, and then only officially you can get an antibiotic in a developed country. And surgery has to be performed with a particular certain experienced doctor. But where if I want to burn my money, I am more than welcome to open a brokerage account or a Bitcoin account and burn my money, thinking I will try and error. Money is earned very hard way. And that's what my point is. So value investors avoid all these things. Now, we as a behavioral age, we only have an edge when we have a process, when we have a checklist, and we have proper planning. Now, understand that market psychology, market will have fear, market will have greed, market will have temptation. I need to understand that I have to switch on my PC, switch on my laptop, do not see my share every day. I have to have a proper checklist, time frame of business existence, where I'm investing, size of the business, whether I am on the founder driven business, strong growth is there or not, whether my business is leveraged, does it have a salient point, does it sell online? Example, if a sketcher is been put on tariff because of China, will that business be finished? If I have read the balance sheet, if I know that it has got $2 billion worth of cash, if I know it has a very good booming business in India, and they also have a manufacturing outside of China, I will not sell it. And probably, in my opinion, this is not the job of the common man, and that is why he should give the money to mutual funds or ETFs or people like us who are available on phone but also committed to make you larger than life money. And the last perspective is understand a business from a consumer perspective. Day before yesterday, Netflix surprised with their earning. Now, if I am glued to my Netflix, irrespective of the tariff and turmoil in Trump, why should I sell my Netflix stock? And that's the consumer perspective. Now, coming to valuation, it is not easy and it is left to the professional. You cannot do it. So, investing is simple as per Howard Mark, but it is not simpler. And that is why it has to be left to the professionals to do it. Now, final takeaway I have for all the investors: market survive presidencies, tweets, and tariff, because US is a democracy and Trump cannot afford after a point, and I think we all know it now by now because that's why he has paused the tariff. We know that he cannot afford to curb the market, and we see markets have gone 20%, 28%. Historically, from 1960, they have gone up and down, but still market has, on an average, made 10% return. So we have to focus on value and not headline. But sometimes we glued it to the headline. We have borrowed money and then we get into trouble. So my friends, I have a request. If you're watching this video, even after recording, please make sure that don't take leverage, don't have short-term horizon, and don't burn your money on your own. In fact, I am very surprised that some of my friends have given their money to me because they realize that it is really creating a lot of stress. And that's why we have created a heart. I always ask my friends who want to invest on their own, do you have a checklist? Have you made a 10-point checklist that this is how I will buy a company? Now, that is why I'm saying build a resilient portfolio, stay consistent. If you cannot do it, if you have not taken a course, if you have not read 5, 6 books, leave it to people who are professional and their incentives are aligned with your incentive. And that's my takeaway. Now, how do we invest? We run a strategy called Founders Portfolio, which means we invest into companies which are run by founders. So 80% of our companies are run by founders. And surprisingly, we are not down this year, but that is just part of the luck. All I'm trying to say is that even if I would have been down this year, I would have caught up, because in 2020, in March, we were down 20-25%. And by the year end, we came out to be a winner at a 40% return. So not every year can be great, but in every alternate year, you may come up, because equities are non-linear. And that is why they don't teach in MBA. So MBA HR, MBA finance, MBA marketing, they're all linear lifestyle. You get a job, you work for a certain thing, irrespective of whether the ad works or not. Like today's in this seminar, it might have been failed as an MBA marketing, but investing is a long-term asset. And that is why I moved on. We'll record it and we'll send it to everybody, because investing is not an easy subject. It is close to Maya, and Maya illusionary illusion is very, very difficult for people to understand. Even at your own house, if you see, people will not listen to you in the money matters. Money is sometimes close to even more than the girlfriend and the boyfriend or the husband and the wife. That close people are to their money. So our vision is to achieve a consistent and sustainable risk-adjusted return. Now, what I mean by risk-adjusted, in fact, in our business, we can control only risk. We cannot control the returns. Now, how do we control risk? We do not buy companies which are darling of the Wall Street or the Indian stock market. Like we were away from Baiju, we were away from all the startups, we're away from Nika. All these companies we don't buy. We do not buy a company that's got a lot of debt. We don't buy a company just not having earning potential. We don't buy a company. So let me ask a question to my audience that which is a good company? Let me ask you this with three options. A company which sells the product and get the money after 3 months. A company sells the product and get the money. And a company sells the product later on and first get it money. Which company is the best? I can't hear
I'll
you.
say the last one.
The last company.
The third one.
Thank you. So when you go to a mithai wala in your hometown and to get samosa, you give money after you take the product or while doing it, or you give it 5 days ago.
So when I'll take the product, I'll give the money.
When the doodh wala or the milkman who comes to your house, you pay him after a month or you pay him every day.
Obviously after the month. Sir.
After a month.
But when you buy this phone or the grocery from Amazon or from Apple, do you pay them in advance or you pay them once they come on a doorstep?
Definitely, it's in blanket or something like that. We played in advance.
That's what. So cash flow and cash flow and cash flow is the key for successful investing, specifically in these kind of time. So right now, the cash on the balance sheet, earning or cash flow on the business, this is the key. And a company which has done it for the last 10 years, it has made a culture. They know how to woo the president or the previous president. So think about it. Apple and other phone companies and chip companies had been put on tariff, and within a week, the tariff has been pushed off and waived off for some time. And that's the power of business. So our vision is to reduce the wealth inequality, help the people who do not have a lot of savings to help them to save and make millions, and some people who already have million to create a legacy for them. So we create HNI and UHNI. It's a very, very what you call very unique mission. And we also now through these webinars, we are trying to impart financial education to the masses. We also have a perfect recipe for retirement series where anybody can come and learn what is true richness and how they can have a happy, healthy life. And our commitment is we are going to be your partner. Now, every company sells your product. We're not interested in selling your product which has a limited lifeline. We would like you to be partner with us for life. We have low turnover, we have low transaction, and we have low taxes. What I mean is that why should I sell you a product when I know that what I'm selling it to you is going to last for longer? So our investment strategy is like a yoga. Continue to do it whole life with a proper dieting discipline plan, and you will have a long, long life and a long, long wealthy life. Now, our investment philosophy is like coffee can. In the coffee can investing, the only difference we have is we also look at the valuation. And we are opposed to mutual funds and all. We are a concentrated investment strategy. We buy 10 to 12 companies and we keep them unless and until we find that the owners, promoters are deflected, or we find a better company outside, then only we remove it from the portfolio. Now, looking at the opinion of ours, our opinion is that risk lower and higher the return. People think higher the risk, higher the return in equity market. Let me tell you, Warren Buffett is the most conservative person. Now, here the difference between conventional and conservative people. Conventional people are glued to the investment strategy which their forefather used to adopt. Now, earlier our ancestors used to buy land. Now, land is limited, so land has appreciated. Also, earlier cash and white money are the same thing. But today, when we are in the metro cities, we are buying flat. And the word flat says, I am flat. It also says that there is no dearth of going up. We can go to 40, 50, 60 floors. Now, if your country or city doesn't have that right now, it will come. Like Dubai has so many skyscrapers. And that is why flats are very difficult to make money. So that's the conventional investment. The second is the gold. Now people think gold is now going up. Let's buy it, keep it. In INR currency, gold has made 10 to 11%. In dollar terms, it has made 6 to 7%. Gold is a commodity. It will not give you cash flow. It is good in some cycles. It is very bad in some cycles. So from 2000 2008, gold made a lot of money. 2008 or 11 to 18, gold made zero money. But from the 15, the gold cycles again started. It may last 1 to 2 or 3 years because of the uncertainty right now. And then afterwards, one has to sell the gold. If we are good at timing it, probably gold is a great investment. But if not, then we need businesses which can make a lot of money. Now, it's a great, gruesome, and what you call good business segment, what you call diversification. I just gave you some example. I'll give you an example of technology company. All tech companies are low on capital. They are a great business. Like Airbnb is the biggest hotel in the world, but does not own a single hotel. Same is true for OYO rooms also. Now, probably the growth could be a concern here, but they are the great company. Now, coming to good companies, all the banks, because when you land $100 million, you make $10 million. If you want to make more money, you have to raise more money. So bank comes into good businesses. And third is gruesome businesses where they keep losing money, but they are required because mining business are required. Sometimes utility business is required. Government banks, for that matter, barring India right now, these are gruesome businesses, but they are also needed. We should be away from them because you never know when to buy and when to sell. Now, we have categorized our investment strategy into SQGLP. We buy small companies, we buy quality companies, we buy companies which are growth oriented, and we do not sell or buy because we do not want to attract a lot of taxes. And the price is the last thing which we look at, but we look at. And that is how we invest. Now, moving on, the 10-year sales and net income. So, this is something which I want to tell you. We have an investment checklist. We look at the market cap of between $1 to $30 billion, company that exists for minimum 10 years. What happens when a company exists for 10 years? It means it has a lot of learning lesson. It is very similar to hiring an experienced employee. A lot of these companies hire 5, 6, 7, 8 years of employee minimum. Why? Because in the starting phase, an employee who's a fresher, he does not know what he want to do in life, what his career moves are. Then they want to go for MBA. All that drama happens. Similarly, in a company also, fight happens, problems happen. I'll give you a very good example. In 2015, Wadilal brothers started a spat because they were the CEO, CFO, CTO, and the cousins having this issue that two of them or will take away the business from the one of them. It took 10 years for Wadilal brothers to resolve their spat. On 25th March 2025, this year. They decided that we will replace ourselves with the external person so that our spat is not gonna continue. The moment they said that, the stock is up this year 50%. So it takes a longer period. Like Anil Ambani would have taken 10 years or more to do and understand that his brother is a great businessman. And that is how maybe he will restart his life. So 10 years is something which is must. Don't fall for startups. If you want to fall for startup, it is for rich people actually. Or you have to have 30, 40 companies. So we do not invest in startup. We invest in public listed company. We want liquidity. We want to invest in founder-run businesses. We want to invest in businesses like right now I am doing this presentation on Apple PC. I am running a Google slide. These are the businesses we think, we sleep, we eat about. We cannot live without them. In America, you have to have an Uber. In India, you have to have an Ola. This is the companies. Like if somebody asks, क्या करना चाहिए? Google कर लो. अरे, they don't say search. They say Google कर लो. Where are you gonna watch the movie? Netflix. You don't say OTT, you don't say Z5. That is how our life has become neural networking. That's called economic moat. Then financial is like a heart of a business. Price is a slave of earning. Price is in the share, but you're investing in the business. And the business language is financials. If the financials are bad, they are very, very crooked, I will not make money. And the last thing, which has to be first thing, is company culture. They say in a great company, the culture eats the strategy over breakfast. Even in the bad company, same thing happens. आप कितनी strategy बना लीजिए, how many strategy you make, if the culture of the company is bad, the company won't survive. So culture is the most important. I'm going to show that to you also. So let me show you something which is interesting. So while searching for an insurance company for our portfolio, how do we do a search? Now, very famous Zurich Insurance, a lot of people know about it. Now, what we do is a very simple method. I'm trying to explain it to you. I will look at the Zurich performance for last 10, 20 years. Now, please tell me in the last, and other participants also who are there, please feel free to participate. You have given your time to us, Mr. Hamza and Kadir. Please participate. Zurich Insurance has listed at 1995 at 219 Swiss franc. In this whole 25 years, how much money has Zurich Insurance delivered to shareholders? Look at the screen and you tell me. It's very easy. $1,000 or $10,000 become how much? A very simple question I'm asking. Zurich Insurance has made how much money for their shareholder from 1995? Anybody else? Mr. Kadir?
Yeah, I'd say probably around 1,000 Swiss francs plus.
1,000%?
Yes.
Okay. I'll tell it to you. You figure it out whether you find it correct or not. You invested $219 one share. It is only 559, which means it has only more than double your money, which means it has made $1 grown by 1.54. It is here if you see, and $1 has become 2.54. It is a very bad return in the 25 years. It only double your money. Now probably it's a wrong thing to see. Let's look at the other company. Allianz is the other insurance company. Now again, from 1996, if I put $1,000, how much I made? यहाँ पे लिखा है, देखिए प्लीज, यहाँ बहुत इजी लिखा हुआ है यहाँ पे. If you read it properly, 1.81 times it has grown. So $1 has become how much? Or €1 for that matter. बताइए सर. Avdi Bhavarth, $1 has become how much? फिर कहता हूँ बहुत सिंपल है. देखिए मैं आपको बताना चाह रहा हूँ, हम सब अपना वी वांट टू इन्वेस्ट आवर मनी ऑन आवर ओन. वी आर नॉट एबल टू से सिंपल थिंग. $1 has or euro has grown by 1.8 times. 181% means 100 has grown by 181, which means 1 has grown by 1.81, which means 1 has become 2.81. That's it in the last 30 years. Now let's try EXA. Probably EXA would have made a lot of money. Now look at EXA. 1998, if I invest $1, how much it is now? Please participate.
78, sir.
$1 has become how much?
So around 78 plus, sir.
How much is $1 now? Tell me.
178, sir.
$1 become 178 or 1.78?
1.7, sir.
Because 28 only become 39. So it is not even doubled. So it is 1.78. Like that, now look at Generali Insurance Company. Now tell me how much it made in the last 25 years. Or 28 years actually. More than that, 30 years in fact. Tell me, $1 Avdi is based how much?
1.14.
1. Correct. Thank you. Now, one more company called American insurance company called MetLife. Now, probably America is an amazing place. This company would have made a lot of money. Now, let's see how much it made. $1 has become how much in the last 24 years?
5.31.
Absolutely. Thank you. Now, is it a great return? No. So when we invest, we first see whether that segment has made money or not. So we think, oh, Warren Buffett also runs an insurance company, but that's a company which is under the holding company, so we can't see their performance. But then how come other insurance companies are not making money? Then we realize all this MetLife, EXA, Zurich, they're all nothing but life insurance company. Then we read further and we watched the videos of these insurance analysts and we realize life insurance companies don't make money. So we will never invest in this segment. And then we found a company called Progressive Corporation. And now I want to ask you a question again. It's again an insurance company. Now let me ask you, and I think Mr. Kadir has tried a reply. Please reply, Mr. Kadir and Hamza. 1998, when the company got listed 1985, if I invest $100, how much is that money right now? Abdi Bawad, please also participate.
Uh, 836.36 around.
For $1. What about the $100?
8,036.
$100 has grown by 736 times, right? If you multiply 736 to 100, it is 7,000 and it is 70,000. It is 73,000. $100 has become 73,730. Now, if I tell you $1 million, you will not be attending my webinar. It will become $736 million. Now we think, oh, insurance companies don't, they make money, but not the life insurance company. And then we look for smaller companies in this factor, and then we invest. That is how, and when I say I mean invest means then we get interested, then we read the financials, and then after 2-3 months we conclude in one company, and that is how we buy. I'll give you one more company in the property and casualty insurance space, and done a phenomenal job, Kinsale Capital, and it has made roughly, look at the returns, 25 times in the last roughly not even 10 years. And this is the kind of companies we look for. And it's into property and casualty insurance. So insurance as a segment is a big segment. There are some segments which don't make money. There are some segments they make great money. When we get sufficient examples that these segment or this sub segment make money, then we start get interested, and then we find one particular company which is undervalued, and then we invest. So I will just tell you that this is our portfolio stocks, and we look at 10-year return on capital. Return on capital means how much a promoter is making on their own money, including the debt and the capital they upload in. And that is how we invest. Now, if you look at the ROC, ROE of our average is 20%. And this is a very important criteria, comes under quality. Now, I'll show you the quality. Wait a minute. Yeah. So our investment philosophy is that value investing is a tool. It has got 3 legs. The first is quality, the second is growth, and third is valuation. I will simulate for you from a marriage point of view. You want to get a good bride or a groom. First, you will look for the right family, a cultured family. Then you will look at that girl or boy is educated or not. Then only you will go and meet. After you will meet, in half an hour to 6 months, you will be asking, how do you see life together? Do we sacrifice when we come together, or are we more career oriented, or are we more husband and wife oriented that we want to grow together? And then it comes to shadi kitne mein karni hai. Because if this all two are okay, but the girl's father says I will not spend much money, or the husband father, the boy father says I will not invest much money, the marriage will not happen. But this is the last thing, sir. If somebody tells you, please marry my girl and I will give you $1 million, we should not invest or we should not get married, because that's a wrong thing of looking at the investing. But people look at this, oh, share price has gone down, lay low. So value investing is a stool. The third leg, the legs are quality, growth, and valuation. Please understand the quality is the first leg and not the last leg. Valuation is the third leg, not the first leg. And that's how we invest. So in a nutshell, I talked about how we invest. I have a lot to talk about. Is our India fund, where we invest in a similar strategy in dollars. So I would like to stop it here. And this is my investment team for the India fund, where Kane is based in the US. He is also the CEO of Ridgewood Investments. He managed $350 million. So Kane and me, with Mohan and Rohit, where Mohan had the investment research for the India fund, we invest for our clients so that they make money and we make money. It's a perfect partnership. So I think I'm done. All about the risk management. We do risk management. I again repeat that Trump will come and go. We have to survive the market. We'll survive when we'll have a patience. We'll understand the risk. We'll mitigate the risk by understanding that we should not time the market. We should not leverage the market. We should not buy hazard product like derivative option futures. The last slide I have is, tonight when you go home, please understand that this is a time to buy when there is a blood. Don't sit on cash, because a lot of pundits will tell you sit on cash, but this is the time to buy the asset at a cheap price. Now they may go down further 5-10%, nobody knows, but plan it out. Think about the next 5 years and invest. If you do not know your fund, now I request not to invest on your own, because you'll burn your hands and fingers because you don't know yourself. So you do not know your fund, know your fund manager, meet him, understand the strategy, philosophy, culture, process. And the last thing, be very, very greedy when others are fearful. And the fear index is right now highest. So my clients are giving me money. I request a lot of people who are going to hear the recording, please think of stock market as a weighing machine and not a voting machine, because more you stay here, the more weight is going to increase. Thank you so much. I am open to question. Bhavat, Avdi, you also ask questions as the investor, and other two participants were there. Please ask questions if you have any.